Hello, everybody. Bryan Bibbo here, president of JL Smith. I want to take a moment to talk to you about the recent downgrade to the U.S. credit rating and what it means for you. So let's talk a little bit about what happened, why it happened, what are some possible outcomes, and maybe some comparisons along the way, just to give us a more of a macro overview. So what happened? Recently, one of the major crediting agencies downgraded the United States long-term credit rating. This isn't the first time we were here. The most notable one was in 2011. And like that time, it's stirring up a lot of questions, and you know what? It's making a lot of financial headlines currently. So we have these independent crediting agencies like Moody's, Fitch, S&P, and they assess the creditworthiness of countries. They also look at insurance companies, individual companies, bonds issued by those companies, and they assess these credit ratings to them. So a downgrade to the U.S. doesn't mean they can't pay its bills, but it does reflect the long-term financial health, specifically rising debt levels and political gridlock in Washington when it comes to managing the debt of the country. So what happened here and why did this happen? Well, the downgrade was primarily due to concerns around that ballooning debt that we currently have, the rising interest rates. So as that interest rates rise, that debt costs more to service. There's, in addition, a lot of political standoffs where we can't agree as a country, as a leadership, what we should be doing with this debt ceiling. These issues raise concerns about the government's long-term ability to manage its finances effectively. But how does this compare? Let's take a step back, look at a high-level overview, and compare it to two other countries here. Let's take Japan as the example. And they have an A1 crediting rating with Moody's, which is lower than the United States, but yet it remains one of the most stable economies among the world. Then we have the United Kingdom. They have an AA3 rating, which is still below the United States, but is still considered very high quality. Even countries with lower credit scores can maintain strong investment markets and financial systems, like we looked with the UK and Japan there. What are some possible outcomes? Well, in the short term, we're kind of seeing that a slight increase in the borrowing for the U.S. government, meaning the cost of borrowing these dollars is going to cost the government a little bit more money. We saw a little bit of volatility in the market as investors are continuing to digest this news. But the most important things to keep in mind is the U.S. dollar is still the reserve currency of the world. The U.S. Treasury bonds are still considered one of the safest investments from a global standpoint. And most importantly, the downgrade doesn't change the underlying fundamentals in your specific financial plan. So what does this mean for you? At JL Smith, we built holistic financial plans. We have investment strategies to weather events just like this. We focus on diversified, well-structured portfolios tailored to your long-term goals, and we're not here to chase headlines. So we'll continue to monitor the situation for you and make adjustments only when needed. If you're worried about how this is affecting your plan, don't ever hesitate to reach out to us. We're always a phone call, email away for you. Our door's always open. We appreciate your continued trust during these uncertain times, but we're here to deliver clarity, confidence, and maintain calm. Thank you for being part of the JL Smith family.